What's happening, guys, and welcome back to our channel. With the collapse of commercial real estate, people are confused about where to invest their money. Let's have a look at the commercial real estate collapse and the upcoming investing opportunities. Number 4, collapse. Have you ever seen a wide road and an empty property that was supposed to be home? The plots are pretty large, but all you see is just a bunch of abandoned streets. Here, we're talking about the real estate that will face an extended collapse. The COVID-19 virus has produced an environment in which retail, eateries, and a variety of other industrial areas are struggling to stay afloat. Dozens of shops and other retail enterprises have either closed or are in the process of shutting down due to a lack of adequate resources. The commercial real estate market has been thrown into disarray as a result of this. It's believed that the residential real estate market will precede the commercial real estate market because customers would suffer if the commercial real estate market fails. Consumers are an integral part of the consumer market. As a result of the absence of income and employment associated with a robust business sector, the consumer market will decline. There have been several stories about the real estate market in the last 4 months or so. The COVID-19 viral event, according to researchers and specialists, will go through many stages of shrinkage in the US markets. The shock of the viral outbreak will occur first. Following that, the economic damage caused by the COVID-19 incident will be assessed. In the second phase, markets should have already reached a halted market phase by this point. Within the next 24 plus months, the truth of the real estate market is that interest will be driven by income potential and qualifying eligibility. It's anticipated that the real estate market will shift from a low rate opportunity to a low income selling phase. It's because the customers react to the pandemic and the economy restructures with concepts in mind. Fewer customers will be able to purchase high-priced property markets. The Case-Shiller Home Index graph demonstrates that some of the most impoverished and active marketplaces in the United States have seen price rises that reflect significantly too much home valuation levels. Generally, the home price index in the United States seems to be more than 35% higher than its 2006 peak. The home price indicator in Detroit, Michigan just broke the 2006 peak price level, while the home price indicator in Dallas, Texas is more than 75% higher than the 2006 maximum point. This indicates that certain markets have already seen a significant price spike, which may not be stable in the aftermath of the COVID-19 viral outbreak. Number 3, statements. The International Monetary Fund has expressed worry about commercial property and the threat it poses to financial stability. He expressed his views as the industry grapples with a slew of issues following the coronavirus outbreak. Many non-essential stores were compelled to close their doors as businesses throughout the world went into lockdown in reaction to the epidemic. Furthermore, many people began to work mostly from home, and internet purchasing grew in popularity. It has sparked debate about the future of physical storefronts. The debate is about whether businesses will downsize their offices if retailers would require larger logistic warehouses, and how all of this will affect rents. For a variety of reasons, I don't think we're out of the bushes yet, Fabio Natalucci, deputy head of the Capital Markets Division, told CNBC. One is that traditionally, if you look back at the economic meltdown, there was a time disparity between how equities markets fell dramatically and how they rebounded in 2008. The realization of damages in commercial real estate, on the other hand, took longer. Following the initial coronavirus closings, commercial property trading volumes and prices plummeted in the second quarter of 2020. The industry has recovered considerably since then, particularly in Asia, where restrictions have generally been relaxed for some time. There are a lot of unanswered questions regarding the economic horizon, Natalucci continued. Knowing what is circumstantial and what's going to be fundamental is going to be crucial. It's unclear how many companies, such as stores, hotels, and restaurants, have been forced to close as a result of the pandemic. However, the sector's future may become a concern for financial stability in the long run. In brief, The financial stability sector is important for three reasons. The first is due to its scale, and the second is because of its heavy reliance on debt financing. Furthermore, the third is due to its significant interconnection with other sectors of the economy, Andrea Deggy, an IMF financial sector expert, told CNBC. He noted that if a spate of firms in the industry went bankrupt, it would put further pressure on banks that had given them money. Moreover, the commercial property industry is highly reliant on investment from sources other than banks. When the price of these investors' assets decline, they may be less willing or able to provide fresh financing to commercial real estate borrowers, especially in the cases where their balance sheets deteriorate, Deggy noted. Number 2, P2P option. Here's what you've never heard of. With the collapse of the real estate market, which once used to be the best investment option, people have to move to alternatives. There are numerous alternatives other than the commercial real estate option where people can invest their money and can enjoy it for the rest of their lives. One of such options is peer-to-peer lending. P2P lending is a comparatively recent phenomenon. Online peer-to-peer lending services provide loans for businesses, personal usage, and anything else you can think of. If you join a group of shareholders who are ready to lend money to others, you can finance the loan after the borrower meets the criteria. Lending Club, Prosper, and Peerform are just a few of the numerous P2P lending firms available. P2P lending is not backed by a bank. Your payment is probably pooled with that of other investors, and you issue a loan to the person who needs money. After that, you'll get a fixed monthly payment that includes the interest you owe. The major danger of peer-to-peer lending is that you're lending to people who may have been unable to obtain a loan from a bank. Also to the people who otherwise are unable to access traditional loan outlets, potentially increasing their chance of default. You may, however, choose the credit rating and other criteria you'll use to evaluate a borrower, as well as whether or not to finance them. Number 1, other options. The second option you can easily invest in is gold. Gold is often considered a liquid asset, a long-term store of value, and a physical inflation hedge. As a result, it's frequently a sought-after asset type that may compete with equities. Because of its low correlation with other asset classes, particularly equities, gold is a superb option. This is especially true in difficult times when gold may be used as a safety net. Investing in gold may be done in a variety of ways, including buying and holding actual gold coins or ingots, gold exchange traded funds or ETFs, gold deposits, or